Hey guys, welcome to the pod team. My name is AJ.
Hello guys, you already know. This is Lex. Welcome back to another video, and we hope you enjoy it.
Hey, so today we want to continue talking about our coverage on Silicon Valley Bank. And today, Lex is wearing red and I'm wearing green because we do not know where this market's going to go. But right now, the futures look very, very green right now. And that's because I think we just saved a lot of people. Well, the Fed saved a lot of people their money. And I think you want to call it a backstop, but it could be a bailout for Silicon Valley Bank and another bank that's on that just shut down in New York, which is called Signature Bank. So if you have your money in Signature Bank, if you have your money in Silicon Valley Bank, First Republic Bank, I would consider you just take your money out. They're telling the depositors that your whole amount will be ready Monday morning. So basically, let's get into that and let's just talk about what happened.
Sure.
All right,
So go ahead.
so let's say right before the Asian markets open, around 5 p.m. Central Standard Time and 6 p.m. Eastern Time, the Fed came out with a statement saying that they will make a backstop of whatever funds uh that are needed for Silicon Valley Bank. Basically saying that, you know what, if any bank goes through any failure and can't, you know, give the money to depositors, they will they can go through this program where, you know, they'll loan out at least up to $25 billion of money to the banks. In return, they will receive collateral of like assets, real estate, uh any sort of like company belongings that can be used, and it will be held for a time being, till, you know, that money can, you know, be matched to what they are amounted or given. So right now, three banks have failed. And can it spread even further? It's very, very important to look at what will happen Monday morning. I can guarantee you that there will be like a bank run Monday. People are going to take their money out of Silicon Valley Bank, even though they have their assets and everything, because it's the foundation of trust has been broken. So, what to expect in the market is you can see big bank stocks that are very strong, just like Chase, Bank of America, to probably gain in their stocks, because a lot of people and a lot of customers might want to go and put their money in those kind of banks because it's, you know, strong in foundation. And we might see a collapse of the Signature Bank stock. So look for that to crash. And what do you think, Lex? Do you think this backstop is gonna stop the contagion from spreading?
I don't think so. I think this is gonna be it. They're buying time. That's what they're doing, buying time. Also, what you said that the Fed say is saving a lot of people's money. That is very true. And not only they're saving people's money, they're also saving people's jobs. Payroll needs to be paid. These companies, if they get the money back, they're gonna be able to pay their employees insurance and stay in business at least for a little while because what they're doing is buying time. Hopefully they either find somebody else, another bank, or maybe the bank stay in business, stay open, and they're gonna rebuild the trust that you just mentioned it was broken. But we will see. We will see because a lot has changed in what the last 48 hours.
Yeah.
So we just don't know what's gonna happen. Hopefully, again, people's gonna get their money.
Yeah, I like to share the screen right now and show you exactly what. So it's called a Bank Term Funding Program, which is a BTF. That's what they're going by right now. This program will provide liquidity to U.S. depository institutions. Each Federal Reserve Bank would make advances to eligible borrowers, taking collateral of certain types of securities. So basically, any U.S. federally insured depository insurance institution, including a bank, savings association, or credit union, will be eligible for primary credit. So they will be able to borrow $25 billion and basically, $25 billion as credit protection to Federal Reserve banks in connection with their program. There's not going to be any fees. So that's very important to note. If there's no fees, that is basically saying that, this is like giving, like, let's say if I gave you money, Lex, and you go out there, you make a bad business decision, and then I say, well, it's okay. You know what? I'll give you a little bit more money, but give me something in return that like your car. Let me hold it for a while, and whenever you're ready to pay it back, pay it back, and then I'll give you your car back, and don't worry, nothing, can happen after that. So right now they're giving $25 billion worth of credit to these banks.
But that
Bear in mind that they made their mistakes. They made bad business decisions, actually gambling decisions of depositors' money.
I was gonna
Now,
actually,
mhm.
but go ahead, finish it.
Now you can say that, what, if I'm a depositor, I need the risk going into this bank because this bank is giving me, the money that I need to invest to make risky business decisions as well. Because, most of these people are venture capitalists. So what do you have to say about these venture capitalists if they go to another bank? I don't think Chase or Bank of America will be giving them money like these other banks like SVB did.
No, no, and see what you just said too, man, is a good point. This is free money to this bank. No interest. All you need to do is just show me what you have as a collateral, and you're gonna get $25 million. What
Yeah.
about they don't have the collateral to cover the 25 million or $25 billion.
Supposedly this
Then
bank has still $242 billion worth of assets, but 42, keep in mind, 42 billion to 50 billion was withdrawn Friday. So you can say give or take with their losses of that they got $21 billion out of, and they had a 2 billion loss on that 21 billion. So I'm give or take, they have 170 to 190 billion dollars still worth of assets left in their bank. So, and they have expenses of $195 billion. So they're in their balance sheet, they're probably $5 billion down. So looking at it, maybe they'll probably get like 10 billion out of this. The other banks probably might take more. This to me is basically saying if you made a mistake, it's okay. We'll give you some more money. Just don't make another one. It's like,
yeah,
talking
yeah,
to a bunch of kids.
yeah. But what the bank is actually or the government is actually doing is not saving the bank. To my view, that's what I think. What they're doing is they're doing it for the people who might be in trouble because of the decision this bank was making. But what they need to do is just go ahead and let them have the money. And if that bank is going to stay in business, they need to get rid of everybody, upper management. Everybody has to be new, fresh. That's going to make a better
I,
decision.
I I would believe that they should write that too. They should basically. Oh, here's another thing: prepayment. Borrowers may prepay advances, may at any time without penalty. So
That That will never happen, AJ. That will never happen. They will
You
have
already
to
know this. This is like, why even write this? Why
no,
bother to write this?
yeah, because they have their regular expenses, and they're gonna have this payment on top of that. That would never happen. Never, never, never. And the bank is a business. It doesn't have any benefit to pay it on time or before the time they need to pay it. They much rather keep the money and hold it and
Yeah.
reinvest it than just go ahead and pay it. You know what I mean? It doesn't make any sense. I don't even know why they put that in there.
Right here, if you look at it too, the rate for term advances will be the 1 year overnight index swap rate plus 10 basis points. The rate will be fixed for a term of the advance on the day the advance is made. So if they are asking for any advances on some money that they need, like within the year, they're getting a rate plus 10 basis points. I don't think a lot of people have took this into consideration too. So that but what they did took into consideration is that this program is basically backstopping any losses, bailing out these banks, and this news basically made the markets jump. The Dow is up over 400 points, S&P's up almost 2 points, Nasdaq is up almost 2 points, percentage points. So basically that's very good news for the stock market. What's going to be good, what's very important to look at is that if I'm an investor, I'm going to be looking at like a couple of things. Tuesday, the CPI report is going to come out. We're going to see if the CPI data is hot or not. That's very important because last week Biden said that the CPI report is in solid, it will be in solid shape. I don't know if he knows ahead of whatever is going to come out, but if it's a hot CPI report, the Federal Reserve has a choice to make. Now, that choice is, do we continue with the rate hikes or we do not continue with the rate hikes? Right now, the market was like on Friday, the stock market was crashing and they had 80% chance that the Fed is going to hike the rates 50 basis points, which would be terrible for these kind of banks that are struggling. Now, if right now why the stock market is jumping so high is because right now they are canceling out any rates coming forward in this next meeting, which is next week, March 21st, 22nd, which if I'm Jerome Powell, I have banks collapsing on one side and then I have inflation rising on one side. What do I do?
Yeah,
That's a
it's kind of
decision
tough.
that is a very difficult one, yeah, especially if you're chairman of the Federal Reserve, and it has like either whatever you do, whichever way you look at, you're actually gonna crash the economy, or you're gonna slow the economy down. Now, if he doesn't do the rate hikes, it's actually good for the economy, but it's bad for inflation because if he gets a hot CPI data report and he doesn't do anything about that, we'll see prices going up. Now, if he gets a low CPI data report, I see the stock market climbing, and I see if they don't do any rate hikes, you'll see like a bull run, which is really good for stock markets, everybody basically. Um, but 3 bank failures in the past 4 days. I don't think that's a coincidence. I mean,
Yeah.
it was Silvergate first, then Silicon Valley Bank, then it was kind of First Republic trying to go out, but now there's a fourth one, which is Signature Bank. So there might be more. And how many more can they save? You know what I'm saying?
Well, I don't think there will be more because if they don't go up on the rate, it's gonna either way it's gonna end. This problem is gonna end up at the banks because if they don't increase the rate, inflation is gonna go up, People's not gonna be buying houses. People's not gonna be buying cars. And
Now,
banks are in the business of loaning money. And if
now
they don't loan
let's say
money,
let's say they
they're gonna
do
be in
take
trouble.
out the money. If everyone takes out the money, we looked at the balance sheets of SVB in the last video. 93% or 97%. I think I mistakenly said 91% in the last video, but 97% of those depositors have more than $250,000 in their bank account that is uninsured. And
Yeah, because
when
most of
they
those
take
guys,
that out, if they take
what,
that out, right? Let's
mhm,
say they take out all of the money on Monday, they have the bank run. And if the Fed is saying they'll cover at least 25 billion, and if that's all they need to cover everyone's account, that money is going to be gone from that bank. That bank is probably not going to survive, right? Then there's going to be a signature bank, which I'm sure people are going to try to take the money out, but New York Fed shut it down. So, but they're saying that come Monday morning, people will be able to take out all of their money, just like Silicon Valley Bank. So let's say those are the two banks. They take their money out, right? But what happens with if there's more banks like this that have made bad decisions, that don't have the money to give all the depositors their money back? What happens then? How much more is the Fed gonna come and jump in and say, "Hey, here's some more money. Here's some more money. Here's some more money." Right now, they're saying that they're gonna use the federal, like you pay FDIC fees for any uh insurance fees for the bank account whenever you open a bank account.
right?
So supposedly with all those fees, that's how they're gonna pay Silver Valley Bank and Signature Bank. What if that money drains out? Then what? What happens then?
Well, they're gonna have to find some more money. And you know what's gonna happen? Everybody that had money in these banks, all these banks, that money is gonna end up in a big bank. They're gonna go to Chase, they're gonna go to Bank of America, they're gonna go to Citibank, they're gonna go to all these banks, and these guys are gonna benefit from these other banks' losses. Because at this point, some of these companies and most of their customers have more than $250,000 in there because they're businesses. They're most of them are not like regular people. Most of
Yeah,
these accounts are businesses. So businesses, they
yeah,
will have more than 250. And now they probably don't need SVB. Uh,
correct.
the,
But
the, the,
for
the
venture capitalists,
customers,
they're gonna have to look for some bank that actually wants to,
yeah.
give them that type of funding.
But
Like we said,
for the
yeah,
moment, they're gonna have to put this money somewhere.
yeah,
I'm sure they're gonna go to a big bank because they don't want to take a risk because of the economy, how it is. They don't want to go. They're not gonna want to go to a small bank.
yeah,
They're gonna go to a big bank. Big banks are gonna benefit from this,
yeah,
and they're gonna make money. They're gonna sit there and they're not gonna do anything. Just wait for everybody to die. That's what's
yeah.
gonna. That's
So
what
right here
they're
it
going to be
says
doing.
that it just needed $2.25 billion to shore up its balance sheet, which $25 billion should take care of. Now, the Signature Bank is closed. They're closing Bank because of a crypto focused systematic risk. What kind of banks can you use now? Because really,
There isn't,
there's not many banks that are, in the crypto industry that lends money out. So if you got Signature Bank closing, which is a big lender to the crypto industry, what kind of banks if you have crypto, then you're probably just sitting on it, right?
right? And that's the thing. Maybe that's what the government is trying to do. They're trying to keep these banks open because it benefit. At the end of the day, it benefit the country. It benefit new companies, new tech companies. So maybe what the government is trying to do is a good thing, but it's not gonna end up well. Every time you give free money, it doesn't end up well. It
So,
just does.
a little bit of a history lesson is that, when ever since we left the gold standard back in Nixon's time, the gold standard is something that, our money was backed on. Basically, the value of our currency was there. But then, when stagflation and everything hit, a lot of things were like pricey at the time. And I'm pretty sure, I mean, it wasn't in my time or your time. But I believe like, uh, inflation rates were up to 20% at that time, 23%. So that was very high at that time. Once we got out of there, we only went into, what our debt was. So from since then, our debt has only risen, and right now it's at like $32 trillion. And now we're funding and we're continuing to put more money into our debt. And if we don't figure something out by June, we might see even worse outcomes. So it's gonna be a very interesting few days. Like we said yesterday, yesterday we were all thinking that a stock market crash was gonna happen if and nothing was gonna be done soon. And now they did something right before Monday hit. So it's very important for uh these next coming days to be very, very cautious into any decisions you make investing. And I'm still ready to see what happens on Wednesday. Is ChatGPT going to predict the stock market crash or not? So it's going to be a very, very volatile few days. We'll, you know, try to keep you up to date as much as we can.
Yes, and
And
which I'm waiting for you said Wednesday. I'll
yeah,
be I'll
yeah,
be
Wednesday.
watching,
Uh,
and
uh,
I'm curious if how that's gonna end up being if it's
I mean, I don't want the market to crash, to be
uh,
honest. There's like probably a 10% part of me that wants it to crash, just to see like, live how it happens. But you don't want these kind of things to happen because a lot of people lose their jobs, economies tumble, businesses fail, and it becomes very hard for a couple of years till, somebody kicks in and bails somebody out like in 2008. But how much more money can you bail out till the whole economy just crumbles? That is the scary part of the situation. And in these past 5 years, we've already managed to pile up $10 trillion. In just 5 years, we've uh, basically raised the debt by like 35%. So it's very, very scary to see how it plays out. Uh, but it's also very exciting because you learn from this. And like history is proven, uh technology only makes things better for the economies, and that's what our trajectory is always shown. So maybe AI can probably help us in the coming economies, if it actually predicts it correctly and, soundly. So maybe what I'm trying to say is basically if AI predicts this crash and a lot of people are going to start, asking AI what are the steps we should take to, improve our economy and this and that, because obviously the AI is already, doing the board exams in the medical field, the law field and everything, and it's passing it. So maybe it can help us in the economic side, because we have a lot of fools that don't even know how to run banks,
uh,
and they like to play with, people's money
it's
and
not that they
gamble
don't
with it.
I probably it's probably that they don't know how. It's just that to them it's a game. It's not their money, so they take a chance because it's not their money. If they know they're gonna go to jail for life, I'm sure they would be more careful. And that's what needs to happen. They need to be regulated where they're gonna go to prison if they do something wrong. That's the only way
I
it's gonna get
completely agree
fixed.
with you.
That's the only way it's gonna get fixed. When you know something's gonna happen to you if you do something bad, you stop from doing it, and that's what they need to. learn and make sure that if the government needs to make sure if they make a mistake, you go to jail.
Yeah.
Lose the key, see you in 20 years.
Yeah. I mean, yeah, there should be definitely fines and confinement time for these people. But I mean, if it was a regular Joe, he'd probably be in jail.
Oh
And
yeah,
yeah, laws need to change, and there needs to be regulation like tight for these bankers. Obviously, without these bankers, the economy don't run. But I mean, put smart bankers in. I'm pretty sure we could be on top of everything if it's
right.
smart. But
Yeah, but
we'll see how it goes. And do you have any closing comments?
not at all, man. I'm not gonna add anything because everything you say is basically I would say the same thing. Is I agree with you.
Okay.
But
Well, stay tuned for tomorrow. We'll do a pre-CPI report on what to look for, and then obviously what happens after this Monday market madness. So stay tuned, and we'll see you in the next one.
see you guys. Take care.
Bye bye.